Welcome to the Del Walmsley Radio Show. And now your host, multi-millionaire, national award-winning investor, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. Today with me on Tell Del Tuesday is Rajeev and Tamara Kumar out of Austin, Texas, currently. They have done 3,057 units or so, and that's broken down into 23 passive deals they're involved in and 3 deals that they're the lead investors in. Welcome to the show, guys.
Hi, Del. Thanks for having us on.
Yeah, thank you for having us on.
Well, let's get started at the beginning here. You're both highly educated and held down very high posts in corporate America. Let's talk about that, and let's talk about the feelings that even though you have that level of success, you're looking for more. Let's talk about how you started looking for an alternative to investing in just the stock market and so forth.
Yeah, I'll start, and then Tamara can chime in. Basically, I was working in high tech for 25-plus years, mostly semiconductor companies, lots of large, well-known companies that you'd know about, software and system companies. I had fun during my job, but what I found is that as we, got older, and got further into my career, I was spending just a lot of time at work, a lot of time at traveling, less time with the family, watching my kids grow up, less time to spend with my wife, and really that wore on me after a while. And so last few years of our corporate life, we've been talking about what are some ways to manage our life differently. And luckily, Tamara, came across your show on the radio and what Lifestyles is all about. And, that really changed our mindset quite a bit. But going back to your question, it was really starting to become a grind of spending, 50, 60, 70 hours a week plus travel just at the corporate job.
Tamara, how about you? What were you thinking about during that time?
My thought was just I knew there was something better. We were just investing all of our money in the stock market, and I felt like we didn't have enough control over it. And I wanted something more for our children. And so that's kind of how this all began.
And it was hard, Del, because everybody we hung around, whether it's people at work, whether it's our family, whether it's friends, everybody was doing the same thing we were doing. So we really had nobody that we could look to that could show us a different way to handle our lives.
Yeah, that's an interesting point you make. It really is true. I mean, the circle of influence that's around you really controls what you think. So you have to really break out to try to come out of that. What was the straw that broke the camel's back that made you guys start looking? Was there any, that the last straw?
I think Rajeev got tired of hearing me complain for a year about our investments, our stock portfolio. I just wasn't happy with it, and he just finally said, okay, if you can find anything better, do it. And so I had been listening to your show for a year or two, was interested actually in single family. And so I attended the workshop, and then I attended the 2-day seminar. Rajeev was traveling at the time, but I could see the value in it. And I actually saw the value in multifamily even more so for us. And then a month later, Rajeev attended the seminar with me again, and we joined at that time.
And in between, when Tamara told me about her experience of the 2-day, I came back, I was very skeptical. I told her it was a scam. It sounded too good to be true. But I attended the 2-day because she wanted me to. And, man, after that 2-day session, we took it with David Fisher, and my mindset changed 180. After everything we learned during those 2 days, we actually signed up as preferred members, that day at the end of Sunday.
Yeah, I tell people all the time, guys, that it took me, X number of years to learn how to teach this stuff to where people would actually believe me or get it. And in 2 days, you're drinking like out of a fire hose of information. Now you got to go home and try to remember that, let alone teach it to your spouse, right? So I'm sure that when she came home, Rajeev, it was just like insanity as she was, blurting it all out to you. But when you came to see it, you made your own common sense out of it. So let's talk about that 2 day you guys visited together. All right. I love to see intelligent people learn something new because it's like hitting them in the head with a baseball bat. Like, whoa, right? What was it in that 2 day that really just struck you?
So I'll go first. For me, I really was focused on the second day with apartments. We came in with enough resources and potential investment where we knew we could invest directly in apartments. And so when we went through that, everything, Dell, was mind-blowing to me. I mean, just the concept initially that somebody like us could think about buying an apartment. I had never thought about that before. I never really thought about who owned apartments. I never really thought about how many apartments are out there. It just never crossed my mind. So, the first really aha that I had was, man, we could own an apartment ourselves, or at least a part of it if we wanted to invest passively. And as we went through the day, the idea and really the numbers that David shared in terms of saying, okay, let's go through a couple examples. Let's see how the financials work. Let me explain how exactly you can buy something, pay all the vendors, pay all your day-to-day fees, make your residents happy, invest in your residents so they have a better place to live, and still be able to have money left over to where it's a good investment for both yourself and the passive investors that might be investing in that property as well. That whole going through the details of that is really what got me. And then, the kicker at the end, which is learning how to do things like a cash out refi and the fact that you can still own the property but not have funds invested in it. Man, that was mind-blowing.
Yeah, that was my aha moment when I learned about that.
And then also on top of that, learning how you can do all of this without making it a job. And, that's really the trick, I think, to being able to scale the business and being able to provide more opportunities, not only for your staff, for your ability to grow your wealth, for vendors, better places to live for residents. It's really a win-win for everybody, which is what really makes it exciting for us.
So, Tamara, let me just give you an opportunity here to play in on this. You told your husband you weren't happy with the stock market results. What happened when you came to the 2 day and they showed you how to evaluate your return on net worth? Do you remember doing that?
Yes, I do. And, boy, our number was really, really, really low. In fact, gosh, I can't even, it was
like 0.00 something at least, maybe even lower than that.
Yeah. So that was another thing that, drove me to get him involved in this. So,
did it help you make your point that you were trying to make to him that this just we weren't very profitable to what we were doing?
Right. You're right.
With me here on Tell Dell Tuesday is Rashid and Tamara Kumar out of Austin, Texas, sporting over 3,000 units purchased since they started, with 3 properties that they're the lead investor on, and the other 23 are passive investments. Welcome back, guys. We said that we were going to talk about coming out of the 2 day and going home and having that conversation. Were you in agreement on what you were going to do to get started? Did you have to work it out? How did this come about that you made your decision on your first purchase?
We were on the same page, coming out of the seminar.
We both agreed, definitely.
And I think the conversation we had after the seminar was, let's get active from a passive perspective. Let's take all the education, first of all, because I think one of the things we really liked about Lifestyles is, you, Dell, have hours and hours and hours of training that's available to us as lifestyle members, and a huge amount of networking events. We were really, really aggressive about participating in both. So we took all the training over the next few weeks. We attended as many networking events and sponsored meetings as we could, and we still do today. And that was really, I think, key to making us feel real comfortable about making passive investments. So we started doing passive investments almost right away.
Yeah, I think our first passive deal was like 2 months after we joined.
Yeah, and our plan was really just to initially invest passively. We thought maybe one day, a few years down the line, we would consider doing a lead. We thought it's something that was within our, potential to do. But we really didn't have any near-term aspirations to be a lead at that time when we just joined.
So I'm going to ask you questions. Take us away from that point there and come back to it so I can get that done effectively. The next question I want to ask you is this. It just came into my mind as I was listening to you. When you came to these live events, were you at all surprised how open people were with their personal finances, how much they would tell you about themselves and about their businesses and about, how they did it?
Oh, absolutely. Everybody would share a lot of information on any question we asked. It didn't matter whether it was, private financial information or who they're using to do certain things or how they did a rehab or what materials they used.
They were all very supportive.
And also giving us advice on, what we can do to be more successful, in our real estate career. And it's so different, Del, from the corporate atmosphere where, information is siloed and, information is not shared readily, especially strategic and financial information. And it was such a welcome atmosphere when we first joined Lifestyles, and we rely on that today with what we're doing really heavily.
Yeah, that's what I wanted to see if you picked up on. So we'll go back to where you were at there. You're talking about deciding to touch base with education and then passive to get your feet wet and to understand it. When you decided to do passive, did you have a plan, or did you just say, we're going to take the first deal we find? In other words, well, I'll let you answer that, and then I'll come back with further questions. Did you have a plan or not?
I don't think we really
did. I think we thought we did.
Yeah, we were just really eager to get in the deal.
Yeah.
And I think, from talking to other people that have joined Lifestyles, I think that's maybe kind of common. But we were really eager just to get in a few deals. And, especially early on, we just didn't probably think about it deep enough is probably what happened. And
we didn't know as much.
Yeah, didn't know as much. And I think we got into the first few deals, and after that, after we started really kind of understanding things, we realized that, okay, you've got to look at both the lead investor and who the individual is, and then also look at some of the deal parameters. And I think as we've kind of evolved over the last 2, 3, 4 years, we've kind of leaned heavily towards selecting the lead investor that we're comfortable with. And, I think we've heard you say on the radio before that a good investor, a good lead investor can make a bad deal good or a good deal better. And, if you don't have the right individual in there, that's not the case. And so we've really tried to find people that not only we think are good lead investors, but people that we are compatible with, just from a relationship standpoint.
How about the question of going for a value play compared to a yield play? Did you guys have an opinion on that?
We talked about that a lot. And I think the situation that we were in, and to a little extent maybe still in today, both cash flow is important because at that time, Tamara had left her job, or was about to, I should say she was about to leave her job. She hadn't left right when we joined. I was certainly still working, and so we needed cash flow to come in on a regular basis. So, one and then eventually both of us could leave our positions at that time. But then at the same time, we also wanted to grow our overall net worth. And so when we looked at value plays, those were exciting to us because, that's typically where you can make larger chunks of money and grow your net worth quickly. But then, also yield plays, which are higher cash flows typically, those are important because we needed to leave our jobs. So we were a little bit conflicted because we wanted to do both things at once.
Oh boy, you can have anything you want in life, but not everything, unfortunately.
Right.
So let's talk about then, if you wanted both. Let's talk about the term diversification. How did you diversify your portfolio, or did you?
We kind of did a little bit in a sense that we did, try to find some more value plays and invest in those, but we also use some of our funds to invest in a little bit more yield plays. So we tried to do both. Honestly, most of the deals, when we kind of looked at it, they were kind of hybrids. They were a mix of the two. So I think, we're generally very happy with the investments we've made because they have kind of managed to give us some cash flow and grow our net worth at the same time. So we were pretty happy kind of overall.
Mm-hmm.
Well, we've got a lot of other diversificational possibilities, like did you diversify between leads?
We did. That's one thing that we considered, and one thing that was important to us is we didn't have all of our investments with just one or two leads, so we did definitely diversify across several leads. We also diversified across geographies. More recently, initially we did all Texas, but now we've done investments in Phoenix and Indianapolis and as well as Texas, so we've diversified that way as well.
That was going to be my next question. If you diversified logistically, let's also, how about diversifying between beginner leads and experienced leads? How did you see that?
We've invested with both. I think initially we probably didn't give that the right amount of thought, but over the last few years, what we've found is generally the newer leads we feel like are really aggressive. They want to do a great job, and we think that there's a good financial reward there.
Yeah, they're wanting to sell their properties sooner as well.
Right.
We got to take a break, guys. We'll be right back with Rajeev and Tamara Kumar and the Del Walmsley Radio Show.
Teaching you with a roadmap to creating the lifestyle you really want. Keep listening. The Del Walmsley Radio Show returns in moments.
The rich get richer and the poor get poorer, not because that's the way it's set up, but because of the knowledge.
When put into action, knowledge is power. At Lifestyles Unlimited, we empower you to live the lifestyle of your dreams through passive real estate income. For over 30 years, our successful members share their knowledge through case studies, classes, and mentoring. Tap into the knowledge. Attend a free workshop online. Register now at lifestylesunlimitedworkshop.com.
Welcome back to the Del Walmsley Radio Show. Here on Tell Del Tuesday, we've got Rajeev and Tamara Kumar with us out of Austin, Texas. They did 23 passive deals and 3 lead deals. And as we come back here, guys, I told you I was going to start asking you about the lead deals. What made you decide after you had the passive deals going effectively that you wanted to do the lead deals?
So we had thought about it more and more as we did our passive investments, and the more we networked with the different people and other leads, the more Tamara and I would go home at night saying, boy, this is something we could do pretty easily, and this is probably something we could do that'd be much more fulfilling and better for our family versus the corporate jobs we were in. And so I think we had that discussion for a few months, and we finally said, we got to pull the trigger on it and go buy something.
How about you, Tamara? Where were you at on that?
I was right there with them. I felt like it was something that we could do, and I was excited to learn the operations and all the challenges that come along with it. And Rajeev and I pretty much have the same type of personality, and so we kind of feed off each other. And it's worked out really well for us.
When we were having these discussions, I was driving an hour to work in the morning, 6 or 6:30 a.m., hour coming back at night around 6 or 7 p.m. And, I'd be listening to you and you'd talk about the, life of quiet desperation. And I felt like that was me to a T at that time.
Well, I'm just sitting here. I was absorbed in my own thought. I'm sorry. That's funny and I've got to ask you this question. I risk making a complete fool out of myself, but I'm assuming from your last name that you're Indian, right?
Yeah, Indian heritage. I was born and raised in Laramie, Wyoming, so lived here all my life. But certainly my parents immigrated from India back in the 60s.
You just saved me from making a fool of myself, Rajeev, because I was going to ask you, you guys got along so well together, you probably had an arranged marriage. The American way of picking marriages just don't seem to work with 50 to 75% of them ending in divorce. So that was going to be my question. So you saved me from making a fool out of myself.
My parents had one. My parents had an arranged marriage, but not us.
Okay. Did they try to get you to do it?
Yeah, there was, a little bit, yes.
Little discussion?
But I think they'd been here in the U.S. long enough and understood the culture long enough to where they didn't press it. But initially there was interest to go down that path a little bit.
Yeah, a little personal, but still, to me, it's always been interesting to me that the arranged marriages have a better percentage of staying together. That's why I'm laughing my head off, I'm thinking, somebody could have found a good one for me. I'd been a lot better, after a couple of mistakes. So as we go down the line here, you guys working together and decide to go out there and do these leads. Let's talk about how did you prep and what was your first steps of getting ready to do this thing as a lead? I mean, you had to go out and do what to be prepared?
The first thing we did, because, every time we do something new, we are the type of personalities that like to be prepared. So we really retook a lot of the lead education that's available through Lifestyles, and we listened to a bunch of those videos multiple times to make sure we understood that. We really paid a lot more attention to the passive deals that we were in and made sure we understood everything we can, understanding financials, asking questions of those leads that we were invested with. We doubled down on the networking and, would really work closely with our mentor as well to make sure, we were getting a lot of good advice and following that advice. And so those were really the steps. And then beyond that, it was, starting to work with the lifestyle real estate agents and other brokers to start to review different offerings. And we really tried to look at as many properties and evaluate as many properties as possible to really get that experience and understand, what made a property a good fit for us and what didn't.
And I'll add, I think the first property that we actually stepped away from it, and looking back, it was probably a mistake. We got a little nervous about it, but soon after we did end up getting one in San Antonio, and it took us probably about 8 months, maybe to a year to get our first acquisition.
Like Tamara said, we were a little bit apprehensive, probably not bold enough at that time.
Very conservative.
Did you guys have people willing to invest with you arranged before you had found the deal or not?
We did. That's another huge advantage, from our perspective of being part of the Lifestyles family, which is Lifestyles just makes it so easy with what you've set up to network and get introduced to other passive investors that are wanting just to be passive in different syndications. And so we would go to these networking events, really be able to meet and introduce ourselves to other folks and build our list of potential investors. So by the time we actually got around to, doing a syndication ourselves and becoming a lead investor, we already had a pretty large list of potential investors we could go to and say, hey, this is the offering that we're coming out with. Are you interested to invest in it?
Did you guys ever go to the expo and network there?
Absolutely.
Yes, we've been to all of them, actually.
Did it blow your mind how many
Okay.
investors there were in that little investor link-up room, where the leads met the passives?
Yeah, I'd guess 2,000 or 3,000. There's so many people in there. It's a huge ballroom for those that maybe haven't attended, but a huge ballroom in the convention center, and it is absolutely jam-packed. It's almost at times hard to move. There's so many people in there.
Yeah, typically we cut off the number of leads that get a table at 250 every year, and then there's thousands. Like you said, 3,000 is probably a good guess at just about how many people are in there every time. So you guys decided to go out and do the deal. Let's talk about the first deal. What were you looking for? What made the first deal appealing to you?
On this particular one, we were looking for something that, was, I don't know, maybe a little bit of a lighter load on us, just being brand new. We didn't want to be stuck with doing a huge amount of rehab. So we did find a property that the previous owner had put a lot of effort into the interior rehab. There were still some things that had to be done on the inside, but I would say the majority of the interior had been rehabbed, and we thought that was really appealing because what that allowed us to do is focus on the exterior. So we did things on that first property, like we replaced all the roofs. We did a huge amount of landscaping upgrades. We did replaced all the staircases. We repainted and fixed up all the siding, wood siding on the exteriors, on the patios. Did a lot of plumbing stuff on the exterior. So it really enabled us to kind of focus a little bit more on the exterior as opposed to doing both full interior rehab and exterior. And we thought, that would be better for us as brand new lead investors.
So let's paint the picture here for a second. You grab this thing. It's not a heavy lift. It's a good size for a beginner. Some things that are very easily obtained. You've been out, you've been on road trips, you've seen what other people have done, so you were able to just copy or duplicate the same results they had. Did you get any rent gains in the first year? Now, I'm backing this up to 2019 to 2020 because we all know January, February 2020, COVID hit. And that's a completely different animal. And then since then, you've bought two more properties, but both after COVID. So I'm trying to back this up against COVID. What did you get done before COVID happened?
From a rehab perspective, we got most of our rehab done before COVID. Mm-hmm. I'd say the only thing that we didn't do during COVID is a lot of the interior work that had to be done that was remaining. We did those as residents would move out and new residents would move in. So during those unit turns is when we would focus on the interiors, and that continued all through COVID. So we were very active doing that. In terms of your other question with the rental rates, one of the things that was also appealing to us here was that prior to us taking over, the utilities were paid for by the property. And one of the things we implemented is a program where the utility billing was then passed on to the residents.
With me here today on Tell Tuesday is Rajeev and Tamara Kumar out of Austin. And they were explaining that their first deal was just about complete about the time that the greatest disaster of our lifetime, which was the COVID-19 disaster where they shut everything down, the world ended, and everybody went broke and so on and so forth, occurred. Yet I see that immediately after the 2019, disaster is over, you bought two more apartment complexes like bingo bango. So tell us, what happened during COVID? Did you get hurt, not hurt? What allowed you to come out right out of the blocks after it and be so excited about taking on more projects?
Yeah, so, we were apprehensive as COVID hit, as was everybody. But I think one of the things that really helped us is, there was so much activity within Lifestyles from other lead investors, yourself, Lynn, and other folks involved in Lifestyles that was communicating information and how to go about, getting resident help through assistance programs from the government, how to handle situations, how to handle rent situations, and best known methods were shared across different lead investors. and that was instrumental to us. So we really had confidence on, how to handle activities, just day-to-day activities when COVID hit.
And we were really fortunate to, we really didn't have any problems at all.
Now, we did have residents that needed assistance, and because we had this support system in place within Lifestyles, we knew exactly what we needed to do and, how to go about working with the city government, state government to get federal assistance program funds over to our residents. And we spent a lot of time with our residents that needed help, that maybe lost their jobs or were out of a job. And, we helped them get assistance, and they were able to pay their rent. So at the end of the day, we didn't really have, as Tamara said, a big problem financially through the COVID time.
Great. That's great news. Let's ask this question. Okay, 2019 is when you bought this first property. You've got two more you purchased right after COVID, 2022. So we really don't have the great result numbers to talk about on those. So let's go back to the 19 one. From 2019 till now, which is 19, 20, 21, 22, three years it looks like of this, you have done what? What is the value done on this thing in 2.5, 3 years, whatever this has been so far?
The value of the apartments has gone up very significantly. We've been able to, through the last 3 years, through normal rent increases, we've been able to increase rents, which has an impact to the overall value of the apartment. We've also done quite a few upgrades, as we've talked about, to the apartment, which has made it more appealing to, a class of folks that are looking for that. And so that's enabled us to raise rents as well. And so that's had a pretty major impact, along with just the natural increases in prices that have occurred over the last 3 years.
It's a greater community.
Yeah.
So what would you say the value is done on it? In other words, you bought it at what a door? What do you think it's worth now a door? Et cetera, et cetera.
Purchased around 100 a door, and we think the value now is around 140 a door.
Okay, so you made about $40,000 a door, and looking back, this was how many units? 37 units?
37, yeah.
All right, so I'm going to get out the trusty telephone, which is useful for everything but phones anymore. Let's see. That was 37 times 40, and that's $1,480,000. So you made about $1.5 million in gained value so far. You still have the property, right?
That is correct, yes.
You're still putting out returns. What kind of returns are you putting out for your partners now? What kind of cash flow returns?
And low double-digit returns on an annual basis.
Low double digits. Okay, good. And then let's talk about what did you put into this deal to buy it originally? How much invested capital total did you guys put into it?
We had about $1,250,000 initially invested.
Okay, so you've made over 100% return in 3 years. That's about a 33% return. And if you're doing a double-digit cash flow, that's bringing about 43. So you're averaging just under 50% return a year for your investors and yourself. Actually, more for yourself being lead, but for your investors. So the question then is, how does that, Tamara, compare to that stock market stuff you were doing?
Yeah, a lot better, for sure. You can't even compare the two.
And we haven't even touched on, the tax benefits, which has been amazing.
Yeah.
Yeah, I bet it has. Now that you guys are full-time investors, you get to claim a real estate professional. You get to take all those deductions now. And since you're not working in corporate America, man, you should not be paying any taxes at all on your passive income, are you?
This the taxes for this year will be our first year without any W-2 income.
Okay. Well, since you only have earned income and all that's being covered by depreciation, you're in for a surprise, guys. It's going to be great. All right, so we've only got a second left here, and I want to ask you one more question. What's the plan for the Kumar family in the future here? Where are you going with this? You got only 30 seconds here.
we're looking to purchase more properties over the next few years and build out our staff, scale the business, and be able to provide, better opportunities for staff, vendors, as well as residents that are moving in.
What about the lifestyle? How's that changed?
That lifestyle is definitely huge for us personally, and boy, we're looking to spend more time with our kids, with our family, be able to do more traveling, do some of the things that we've been, talking about for the last few years, but haven't actually done. So that's huge.
We do have a property manager for the first time, so we're going to now start learning to work on our business instead of in it.
Working on it, not in it. We'll have a great day, and remember this, it's not the money, it's the lifestyle. We'll see you tomorrow.
The information and opinions you hear on the Del Walmsley radio show are those of the host, Del Walmsley, his guests, and his callers. The Del Walmsley show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley show